Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center. And for more than 25 years, nearly 3 decades now, I've been working with accounting professionals to literally help them both start and build successful accounting, bookkeeping, and tax businesses. It's here on the show that we actually listen to the experts, hear what they have to say as it relates to various topics relevant to having a successful business, from marketing, selling, pricing, tech stacks, training our staff, onboarding clients, retaining clients, so many things that we need to consider as we're running our businesses so that we can be paid what we're worth. Today, I'm excited to have on the show Jonathan Stark. He actually has 15 years as a software consultant working with clients like Staples, Time, T-Mobile, Cisco. But then Jonathan actually pivoted to change and made a change to everything, where he now teaches boutique firm owners and small agencies how to escape the trap of hourly billing through his value-based business model. He is the author of Hourly Billing is Nuts, hosts a podcast called Ditching Hourly, and writes a daily newsletter on pricing for independent professionals. His approach is ideal for small agencies ready to move past time tracking and client micromanagement. Jonathan shows his owners how to actually reposition their services for bigger deals, turn insights into income, and reclaim control of their business. So, Jonathan, welcome to the show.
Well, thanks for having me. That
This
was
is
a
going to be a
great,
lot of fun. As was mentioned before we started, we've got two great radio voices and faces to match. So we're going to be
yeah.
doing great today. One of the things that I'd like to do is give a little bit of backstory or context to what really brought you to having this passion for not doing hourly billing.
Mm. Yeah, so there was a specific story that happened it was probably early 2005. I got promoted to be the vice president of the software firm I was working at, sort of a boutique software firm. We did FileMaker development. It's a very well-known firm. And when I was promoted to VP, I was managing all the developers. We had maybe 10 developers at the time. And so I had to do one-on-ones with them. They'd ask, I was the person they would ask for a raise. So I knew what all their salaries were all of a sudden. Before I was just a developer, I didn't know everyone's salaries. And in that role, I pretty quickly recognized that the developers that we were paying, the best developers, the ones we were paying the most, were probably not really making us that much money, kind of breaking even on them because they were really good and really fast. And we built them out at $150 an hour. And then the developers that were junior and slow and had to do things 2 and 3 times were making us tons of money because we were billing them out at $150 an hour. So if we were going to hire more people, if we were going to grow the firm by hiring, it wouldn't make sense for me to go out and look for the best developers I could find. And I was like, no, this can't be right. And so for weeks, I puzzled over this and I tried to do these mental gymnastics to think like, well, but the, really good developers, they train the other ones. And so that's non-billable, but it's worthwhile. But then I was like, but then the junior developers are just going to get better and faster. So we make less money. So, okay, that's not the solution. So I just puzzled over this for weeks. And after all that time, only then did it occur to me that it was because we were billing by the hour.
Hmm.
And if we weren't billing by the hour, immediately our best developers would be our most profitable.
So one of the things that I think you're sharing there that the accounting profession can relate to is, for decades now, I've heard the conversation of how we need to transition away from hourly. And yet still today, I run into firms again and again and again who still have hourly as either the major way of doing their billing or a good component of how they're doing their billing. And we
Mm.
understand that it's a relevant metric to watch as it relates to ROI, but not as we interact with our clients. So I'm kind of curious, as you have this epiphany and see that the hourly billing was the problem, what did you see as possibly the solution? What is it
Mm.
that was better than hourly billing?
Right. I had no idea. I just saw the problem,
Okay.
and I went to my boss at the time. His name was Chris. We're still friends to this day, many years later. And I explained the story that I just told you. I was like, hourly billing is causing all of these problems that we had been wrestling with. It was like the root cause of a half a dozen things that we'd been trying to fix with band-aids that we didn't think were related.
Yeah.
And he was like, okay, intellectually, I understand what you're saying, but what would we do instead? And I had no answer to that question. I had no idea. I was like, well, I guess fixed prices, but we had tried that from time to time and always felt like we got burned by it. So I didn't want to, I couldn't really say fixed prices because I knew that had not worked for us in the past. And so rather than, jeopardize the livelihoods and mortgage payments of all of our developers, I went solo on a sort of journey to figure out what an alternative might be. And I was also moving and buying a house, and like a lot of things were going on. So in 2006, I moved up here to Providence, Rhode Island, and I was in a Borders bookstore and I was hanging out in the business section, and I came across a book by Alan Weiss called Value-Based Fees, and I was like,
Yeah.
I've never heard of value-based fees before. I wonder what that is. And sure enough, that was the answer. And that book, if you sounds like you're familiar with it, it's mostly for management consultant types, but not software developers. But there was plenty of core truth, I guess I would say, in there that gave me enough material to like figure it out. And over even in the very first year switching to that model, I doubled my income. I mean, it was like but more importantly, um, the relationships that I had been used to having with clients on an hourly basis were horrible in comparison to the relationships that I was having with these new clients that I was using value-based pricing with. They were so much more relaxed. If something took me longer than I expected, they didn't care. It was like, because now it's not going to cost them more money. Now it's on me to be fast and good. And the faster and better I am, the more profit I get, the happier they are because the things get shipped earlier. And I don't get penalized for being good at my job.
Yeah,
Yeah.
you're
So,
nailing some of those key things that I think are unfortunately tied to hourly billing in a negative way. So let me just kind of illustrate it. And I think my
mhm,
accounting professionals will actually agree. When you're hourly, there's no motivation to really get things done quickly because you're earning money for the time it's taking you to get something done. And so
right.
there's no motivation on your side to do it faster. Like to do one client in 10 hours or do two clients in 10 hours, it's still 10 hours of billable time. And so it doesn't matter. So that motivation's lost. Now, as you do value-based billing, obviously you're doing a deliverable. There's a value ascribed to what that deliverable is, and that clients agreed to it. So now the motivation is to get it done in a timely manner so that I can increase my earnings per hour simply because of the fact that rather than taking 10 hours, it took 5. But if it takes me 12, that's on me, not on the client. They don't have to pay anything more for it. So I really appreciate the value-based pricing only because it actually focuses on the deliverable, which is ultimately what the client's wanting anyways. But in this conversation, before we go further, I want to actually emphasize or clarify perhaps something that you mentioned. You spoke
Mhm,
of fixed pricing. In the accounting world, it's also possibly referred to as flat rate billing or
mhm,
flat
yeah,
rate pricing.
yeah.
Define in your terms what fixed is, just so that my listeners can understand the context of that.
Right. So fixed pricing is just giving a price up front and sticking to it. So it's wild how unusual that is in services because it's literally how you buy almost everything in your life.
Yeah.
You almost never make a decision to purchase something without knowing how much it's going to cost.
Like an open-ended price
Yeah.
point. It's just like a blank check. I'll just pay whatever it is.
Yeah, like imagine buying a car like that where they say, "Okay, this car is probably going to be $50,000, but maybe it'll be 100. Why don't you drive it around for a year and then we'll tell you how much it cost?" And you can't give it back.
Yeah. Yeah.
That is what happens. It's
So
nuts.
So as you're working with clients, I'm sure there's a variety of account or pricing methods that people are familiar with.
Mhm.
We're addressing hourly. There's fixed or flat rate.
Yep.
I'm familiar with menu pricing. I speak on that quite often. Menu pricing is, I think, a very popular one. There's revenue pricing based on the size of the client, how many transactions, perhaps, but more importantly, it's the revenue that determines the value. And then there's oftentimes this value-based pricing that we're now discussing. But the thing I'd like to now move towards is you're a big proponent of value-based pricing.
Mhm.
How do you actually take someone to mentally go through the gymnastics of running a business based on hourly billing to see that value-based pricing is going to be easier and more profitable? How do you get them to
Hmm.
transition that?
Well, it's not easier. It's more profitable, but it's not easier. Hourly is very easy.
Uh-huh.
Hourly is the easiest. It's maybe a little bit annoying, but it's the simplest thing in the world, and we've trained buyers to expect it. So it's really easy. That's one of the advantages. It's also very low risk, which is one of the advantages of hourly. You really can't lose. I mean, if you work for an hour, you get paid $100 or whatever your hourly rate is, and if you go over the estimate and it takes longer, you just bill them anyway. And if they don't like it, maybe they fire you or they quit or they leave, or maybe they just stay with the horse they bet on and just feel like, oh, that's just an expected course. So you're not taking any risk. It's very easy, and clients expect it. So it's not that there are no benefits to it. The problem is if you're not taking any risk, then you're not going to get any reward. You're not going to make any profits. So value-based pricing is a way to calculate a fixed fee or a flat rate, whatever you want to call it, based on what the result would be worth to the client. So that might not be the exact same thing as a deliverable.
Uh-huh.
So deliverable pricing is another common thing to do, and it's a great first step away from hourly. Just for tax returns this much, or whatever. Bookkeeping per month is this much, and just like sort of deliver the deliverable as you promised.
Yeah.
Value based, it takes some practice to get used to it, especially because it's like a 180-degree mindset shift from hourly, which is I put in the time, you owe me the money,
Yes.
to I didn't deliver any results, therefore you don't owe me any money. And the beauty of that is that it forces you to talk to the client in advance about what's the result they want. Instead of talking about, oh, even deliverable based pricing is like, oh, you tell me, name a deliverable that's really common for a tax professional.
Well, in tax, what we're looking for is perhaps tax savings. What is it that you're able to identify from a tax planning or strategy that enables that client to actually have savings that they wouldn't otherwise realize? So,
Mhm.
if you can help me save so much in taxes, I can get a percent perhaps of that because that's the
Sure.
value I deliver to the relationship. It's
Right.
different than tax preparation. Tax preparation is generally just filling out the forms, processing the tax return in a timely manner. That might be more of an hourly or based on the forms filled out, the forms that are used. But
Mhm.
value, I think, is really at that more advisory level.
Right.
Here we are actually working with a client and we're influencing some of the decisions that are being made in the business. We're impacting how that profitability may actually occur within the company. So, whether that's at a CFO and advisory level or a tax strategy level, there's a financial needle moving around based on
Mhm.
what we're actually doing with the client. And
Right.
we can put a dollar amount to that. And we know based on what the current standard is, what's happening today, how that's going to change over the next 2, 3, 6 months. And all of a sudden, we can compare what it once was to what it is now. And that difference is what we can actually be paid for.
Right. And if you do it in arrears, if you do it after,
Hmm.
then some people would call that a success fee or some sort of revenue share or
Yeah.
commission type of thing. Value-based pricing is an approach for estimating that value, that future value, and basically giving a discounted fixed price for it upfront. So, because there's still uncertainty, like the thing that you do might not actually result in the outcome. Maybe I guess it depends on what you're doing in tax, but certainly in software development, if someone wants to hire you to build a SaaS application for them or an iPhone app for them, um, you could price it based on how long you think it's gonna take, but I think that's a mistake. That's like figuring out the scope first and then giving them an estimate, and then after working for 9 months, finding out that the estimate was wrong. It's always too low, by the way. Or you could say to the client, "Okay, here are all these things that you asked me to do. You know I do software, you know I do accounting. Here are all the things that you think you want me to do. So thanks for that. I've taken a bunch of notes. And what I'd like to do now is step back and talk about what's gonna happen after I'm done. Why are you talking to me in the first place? Like, because we've talked about a lot of features or a lot of deliverables or maybe some activities or maybe a certain amount of time commitment. Um, but why not do any of that? What will be bad if you didn't do any of that? What would be bad about that if you didn't hire me and you just hired someone cheaper? I'm probably the most expensive person you're going to talk to. There are plenty of other iOS developers and CPAs in the world. Why would you go with me instead of one of these other options? Why do you need me to do this now? Is there some kind of urgency or financial deadline, or is there a new regulation coming, or is something happening in your industry that you need to get in front of? Why is this urgent? Did something happen? What caused you to come and talk to me? There's almost always some kind of trigger event.
Yeah.
So if you ask these sorts of questions, I call them the why conversation: why this, why now, and why me, which is an Alan Weissism from that book we mentioned earlier. Then you can start to get at the business outcomes that they think you will help them with. So your contribution to these desirable outcomes. And the more urgent that outcome is, the more valuable it is to them, like the more they want it, and the fewer alternatives they see to hiring you, the more it is worth to them. So you can set a price that's going to be acceptable to them, it's going to be acceptable to you, that shares a lot of, the bigger the margin between your cost and their value, the more profit both parties can make.
So one of the things that really stood out to me in there was urgency. You're obviously associating not only the deliverable, what it is that the outcome may be, that desired outcome, but you're
Mhm.
associating with the time, the
Yeah.
urgency of it, and how much it's going to involve both their need for it to take place and your commitment to make it happen. So I think these are great variables. I'm going to kind of back up a little bit and set context for my next question. Earlier, when we were talking about ease, you pointed out that hourly is easy. And obviously, there's a draw to why people actually lean back in towards doing hourly billing. There's a place for it, perhaps. But there also needs to be kind of this explanation of why it's detrimental. And you were beginning at the very beginning of our
Mhm.
conversation explaining why it was causing problems within your own firm. And I think it's important as accounting professionals that we realize that it does actually inhibit us from being as profitable as we can be. It puts us in a lull of realizing, well, I've got a billable hour, but you're not motivated to get things done quicker. You're going to fill that hour regardless because you know you are billing for it. So it lacks the ability to say, here's the motivation to figure out how to be more efficient and actually more profitable. So we've got to come up with a reason as an accounting firm to make that transition and leap over to value-based pricing. Do you know of some challenges that people typically face and how you've seen them overcome them as they've actually adjusted their pricing and found opportunities to actually bill based on value-based pricing?
Oh, there's a lot of them, especially if you are heavily using hourly billing in your firm. It is probably a base assumption inside of all of your systems and um, incentive programs for your employees, and their bonus based on how many hours they bill, and the way your invoicing works, and it's probably baked into everything.
Uh-huh.
So it can be very difficult to turn on it's almost, it might as well just say it's impossible to turn on a dime if you have, like, say, 10 employees. It would have been very hard for me to go back and sort of reimagine the firm that I had last worked at before I went solo. But I have worked with agencies, and there's a couple of ways that I've seen it done. The two most popular, this one's easy, probably it's the less attractive one, is for the principal to hang up a sort of a side business, like a separate shingle, and take on purely advisory clients, either outside of the business or as like a discrete offering inside of the business. So, like, whoever the biggest expert is, probably the owner, then they would start, they'd make this advisory work available to a very particular kind of buyer for whom their advice is highly valuable. So then they can set prices that are far higher than their cost to deliver the outcome. So that can look like maybe an advisory retainer where you're not entering anything into anything, you're not doing any bookkeeping, or maybe it's a fractional CFO. I work with lots of those where whatever they agree to some list of areas where their advice is sort of what's on the menu, what sorts of things they're willing to advise the client about. And then whenever the client has a question about such a thing, they would contact the advisor, and the advisor would answer within a very short period of time with either an answer that the client trusts, like, "Wow, okay, this is the answer we got from our CFO or fractional CFO. I trust them for this kind of thing. We're just gonna run with it, run with that decision." Or the CFO might say, "I'm not sure, but I'm gonna find out. It's probably gonna take me a couple days. Is that acceptable?" They'll say, "Yes," and then you go do the research and find the answer and come back to them. But you're connected with them at a very high level, a strategic level of their business. So you understand, you would have already met with them to understand their, midterm and long-term goals. Are they planning for an exit in 3 years, or are they trying to, like, increase market share or grow their top line revenue? So you've already discussed that with them when you first started working together. And now they can bounce questions off you, and you can act as a sounding board very quickly with almost no effort on your part. And if there is ever is anything that you need to research, well, that's just going to make you smarter for the rest of your clients. Maybe you have 10 of these clients for whom you're a fractional CFO. So you could do that while you still, maybe have, I don't know, a chief of staff or someone running your firm, or maybe you have time to also continue running your firm. But then you could do this, I don't want to say on the side, but as an alternate business, and get this taste for what it's like to not be for getting paid for your brains instead of your hands.
Yeah.
So
You
that's
know,
one way.
so I'm going to offer some of the things I've seen and see if you've got any thoughts as it relates to what I'm going to share.
Mhm.
The first thing that I bring up with those people that I'm, uh, let's say, working with and counseling is to first of all become aware of what you're doing hourly and transition it over to more of a flat rate billing. I think that's typically a great transition to begin moving towards value based pricing, because now what we're going to do is we're going to clearly identify with, let's say, 3 6 months of past billings what
Mhm.
the average has been, and we're going to go to the client and we're say, we're going to make this real easy, rather than wondering every month what your bill from us is going to be and how much time we're putting into it. Moving forward, ours is going to be this flat rate, and what that does is it enables us to first lock in the numbers. Now, it doesn't mean then that in the firm we no longer track hours. We're going to keep those employees doing what they're habitually doing, and we're going to track that so that we can later analyze and see what our ROI is from the next 6 months compared to the previous 6 months, and see if we've actually increased our profit margin. But the place that value pricing really comes into play is not at the bookkeeping or tax preparation level, but it's more at that accounting CFO level, perhaps at that tax advisory level. And here's the secret to the sauce as I've found it, is it's more project based. It's more with a deadline, a deliverable, something that we're tracking. And we're able, from a project standpoint, go in with a specific objective,
Right.
and we're able to price based on whether or not we achieve it. So now we're
100%.
saying here, what are we going to do with regards to receivables? Can we improve our collections process and actually move the needle on the amount of monies that we actually collect versus write off? Okay, well, that's a project that we can work on. We're going to have a deliverable, and we're going to see what's going to financially come of it. And with the role that we're playing as accounting professionals, we're going to base our fee based on the success of that project. Now we've got a value-based project that we have investment in, that we're going to see, and it has a conclusion to it that we're working towards, and something that we can see improvement in. Another great example of it is where we're looking at how we can improve, say, cost of goods. We're going to get in, analyze it, and see if we can actually improve what's going on so that more money is actually hit the go from total income to gross profit. Well, that movement is actually a win for the company. And if it is, we're going to take a portion of that as a value deliverable. The other might be something as it relates to net income. Here are things that we're going to do as it relates to expenses. We're going over the next 3 months to increase, or improve rather, the expenses, and in improving those, we're going to increase what actually hits the net income line. Well, that's a valuable thing for the client to actually work towards. And if they can see that their expenses, their operating expenses, are minimized because of the next 3 or 6 months efforts, we as a company are out now benefiting. So all of a sudden that accountant is, from a value-based position, able to price on that win. So I think the project approach has been very helpful for the accounting professional because of the deadlines associated with it. There's an end to the project. What would you say to all of that?
I totally agree. I don't think it's worthwhile to do value-based pricing on anything that's not a project. So, like fractional CFOs, we just talked about ongoing sort of like monthly fixed fee on a recurring basis to, just do all of the data entry or whatever you're supposed to do, reporting and all of that. To me, I would just set a fixed price for that based on, I don't care what, just something that it doesn't matter. It could be average of past billing for that client. It could be the same for all your clients. You could have different tiers, and based on the revenue of the client, they slot into one, two, or tier one, two, or three. I don't care how you set those prices because you've ditched the billable hour. That's the core thing. Value pricing things like that is really hard. It's already hard, but it's even harder for those things. When you can have a conversation with the client about the goal of a project, then it makes it much easier because for every reason you just described, there's some desired end state. There's a current
Mhm.
state and there's a desired future state. And there's a difference between those two states. And they are measuring something. They know they're in a bad way right now by looking at something. They're looking at something. It could be any one of those things you listed. Our net receivables are too low, or whatever, the stuff you rattled off. And he's like, okay, you want this needle moved? Yes. Okay, how much do you want it moved?
Mhm.
Well, all the way to 100. It's like, okay, realistically, how much do you want it moved? Well, if you improve that number by 20%, it would be an absolute game changer for our business. And then, "Oh, what do you mean by that?" "Well, I wanna exit in 3 years, and then we'll have all this subscription revenue, and then we'll get a 4x multiple or a 7x multiple instead of a 4x multiple, blah, blah, blah," all this stuff. So you can say, "Alright, so the value to you, if this goes well and all of the other, the universe aligns, the stars align with everything else that needs to happen for this to go right, that's outside of the accounting professional's control, you're looking at like a $2 million win, right? Something like that ballpark. Am I right? And they say, yeah, that's about right. That'd be great. So then you can set some prices based on that $2 million win that are a small fraction of that, which which would almost by definition be justified because they're talking to you for this reason. So you've now uncovered this $2 million win for them, and if they're talking to you, they are not wasting their time. They're probably a busy professional. They think you can help. So is 10% of the $2 million win fair? Is 20% of the $10 million win fair? Is 50% of the 10, what did I say, $2 million win fair? Whatever the value is, I probably said the numbers wrong, but whatever the value is, if you come up with three prices, I usually, as a rule of thumb, not a rule or a law, but as a starting point, 10%, 22%, and 50%, and you say to yourself, okay, if that's the goal, if that's the client's goal and it's worth this much to them, and I charged $20,000, what could I do to help them reach that goal? If I charged $44,000, what could I do to help them reach that goal? If I charged $100,000, what could I help them do to reach that goal? Or whatever, however the percentages work out. And then you give them those three options of increasing involvement, and they can pick whatever one they want. And then they're fixed prices, and it's on you to deliver whatever you promised in that tier in a way that's going to satisfy their progress metric or their success metric for your contribution. So like well, I'll stop there. I don't want to monologue too much. It
Well,
raises a lot of questions that I'm tempted to jump to.
yeah, so let me just kind of summarize this. What we're trying to do is with the accounting relationship that we obviously have this recurring billing that's occurring. So what we're
Mhm.
trying to do is whether we're using something other than hourly, cost plus, revenue pricing, menu pricing, we're trying to set a fixed amount for that recurring billing that we can actually then be comfortable with and move forward. So the client understands what's going on and so forth. But from a project point of view, we have this opportunity to actually do value-based pricing, and we can actually go in with an objective. We have perhaps a metric that we're watching that we now feel we can move and improve. We're going to come with a strategy that simply says, look, we feel in the next 3, 6, 12 months, we can actually change this through different things as it relates to our standard operating procedures, policies. All these things are going to need to be done and set up. But to do this, you could pay me hourly. You could actually pay me each month as we try to move this and never know what's going to cost, but yet we're moving in that direction. Or we can just agree that this is a value that if we can deliver in the end in 3, 6, 12 months, a certain number, that I'll get a percent of that. And what it does is it removes the risk from the business owner because obviously if nothing happens, they didn't pay for nothing to occur. As it relates to the hourly, it's not this expense with the hopes that something will come of it. So it really appeals to them and they're able to say, yeah, let's do this project together because they're excited to see what you're going to be able to do. And you're motivated to really move the needle because the better it turns out, the more you make. And so that outcome is something that's very motivating to you. And you're going to put in the time necessary to achieve that because it's obviously something that you want to benefit from. So there's a lot of great motivators to it. So you were saying
There
that
is something I
there's
should sorry to
go
interrupt,
ahead.
but there's something I need to clarify there.
Yeah.
Um, the prices that I would set in a value-based model, I would set the prices upfront,
Yes.
and regardless of how it works out,
Correct.
I got paid upfront, and and I assuming that I am a professional and I do what I said I was gonna do, and it does move the needle that they're looking at, I don't get more money if it works out even better. It's not a commission-based thing that I'm talking about.
So elaborate on that because what I'm understanding is you're not paid until the outcome with
No, you
value-based
paid
pricing.
upfront.
Or you're paid up front in your scenario because the ones I've been experiencing have actually been dependent upon the outcome because the value is yet to be seen as to the deliverables. So
Yep.
in my case, I've not seen them actually make payment because nothing's actually changed.
Right.
So explain a little bit further on how you're in the negotiation of the value-based pricing, getting paid before the project begins.
Yeah, I'm glad I brought that up. Okay, so the what you're describing to me is a commission,
Yeah,
and
it's very similar to that. Yes.
what you're agreeing to is a percentage. You're not
Mhm.
really agreeing to a price. So what I'm talking about is and you can do that. That is an absolute great way to make tons of money. It's a lot of risk for the
Mhm.
seller. I mean, if they're great at what they do and they interview the client and they're like, "This is gonna be a slam dunk," you can completely de-risk the purchase decision by saying, "Look, give me 50% of the we think you're gonna increase your top line revenue by 10x, give me, X percentage, 10% of that for the first year after we go live, and I'm happy.
Yeah.
That's a total baller move, and anybody who wants to do that, I applaud them.
I've got a story on this. So you finish your thought. I'm going to
Okay.
give it to you.
People who are currently billing hourly are probably not risk takers of that magnitude. So what I'm talking about specifically with value-based pricing is you're giving them a price upfront and they pay it upfront. And then you move the needle. So I have to go a little bit deeper into the details here.
Okay.
So in the why conversation, I'll use my world and you can translate it into your world.
Please.
So in my world, I'll oversimplify it. Somebody comes to me and says, "Hey, I want you to add a like button to my e-commerce application. We've got this e-commerce application. We want you to add like buttons to all the products in the comments and everything. How much will that be?" And I would say, "Well," and they would tell me all the things that they want it to do, and then what color they want it to be, and where they want it to show up, and how it works. And I'll say, "This is all great. Can we back up for a second and tell me why you want to do this? Why this? What is this going to do for your business? Is it just cool, nice to have?" Probably not. They probably have a really good reason. Or maybe I can come up with a different way to achieve that outcome that would be probably easier. And then I'd say, "Why do you need a like button right now? How come you haven't had it for years? It's not that complicated, right?" They'd say, "Oh, there are all these reasons, but something changed and we think this is the time to do it." Okay, great. And then I would say, and then the last thing would be, "Why hire me to do it? You could get your cousin Vinny, you could get somebody from Upwork, you could try and vibe code it with AI. Do something cheap. Don't hire the most expensive person if you don't need it." And the process of them answering those questions, they're going to say, "Well, it's going to increase our revenue by $1 million a year." "Oh yeah, why is that?" "Well, because if we can get the like button, if we can get 50% of our users to click the like button, it's going to show up on their Instagram feed, and then that if everybody has an average of 100 people on their Instagram feed, then that will translate to our numbers show that will project out to $1 million increased revenue." That's all their math. I don't know if that all their math is going to work. And I can't control it because the CEO could have a sex scandal like halfway through the year and the company could go out of business. Like there's a lot of things that I can't control. But what I can control is optimizing for the users of the app to tap that button and share it on Instagram. I can control that.
Yeah,
So
I'm
I would
liking this
say,
conversation because it's going to draw a great distinction for my audience between the two types of value-based pricing. What
mhm,
you're describing is a deliverable, but it's something you're in charge of. And what you're assessing with the client is what their purpose is in having you do it.
yeah,
They have a reason for it. They know the ROI. They understand financially what's the motivation in the company to have it done.
yeah,
They're determining whether or not it's good for you. And I've experienced this many a times in interviews with various agencies and so forth. What they do is they go through this litany of questions asking, okay, what's the lifetime value of your client and what's the valuation of this? And what they're trying to do is get a number of values so that they can determine what the valuation of the project is so that they can then say, regardless if it's a $5,000 project, 50,000, 500,000, they're going to ask for a percent of it because they know this is what their contribution to that project is. So you're absolutely right in that. I understand what you're referring to now, and I appreciate that. The difference between what you're describing and what I was alluding to is that more commission type thing based
mhm,
on the outcome, the deliverable, whether or not it actually does anything. Because the founder of Universal Accounting back in the 1970s, we're talking years ago, the way he started the business originally was he was known as the turnaround king. And the business
nice.
model that he was
That's good.
utilizing
Yeah.
is he went into businesses, many of which were near bankruptcy.
Mhm,
And so these people were making nothing, if not negative, in their net income. And so what he was doing as a business consultant, offering accounting services, is he was going into this business that's about to fail, that cannot pay him for his services. And he was asking for equity. If I
mhm,
can turn your business around in the next 6 months, if I made you right now, you're losing $100. If I could make you $1,000, would you give me, 10, 20% of that? Well, yeah, right now
right.
they're
It's a
losing.
no-brainer.
If you
Mhm,
made $1,000, I'll give you 20% of it. Okay. So if
right.
I made 20,000 or $10,000, 20%. If I made $100,000, 20%. Well, they're losing money. They're about ready to foreclose on their house. They're about ready to fire all the employees.
Yeah.
He at one point had 7 businesses with which he was working so that he could actually assist them turning around. And some of those businesses still exist today. Why? Because he was able to go in there and actually salvage the business model that they were utilizing from cash flow and so forth. And that business model change
Mhm.
was what enabled him to, in essence, get equity within the business. And so it wasn't he was getting paid monthly. He wasn't being paid hourly. He wasn't being paid for services. He was being paid based on the value he brought to the company so that he could literally make money on the net income as it related to the company's turnaround. So
Yeah.
yeah, he was called the turnaround king. So yeah, I think the distinction that we're showing here based on value-based pricing is there are 2 things. One, what is the perceived value from the client's perspective as it relates to the project? They give you that value and you do a percent of whatever that is, or however you come up with the valuation of your services. The other is the alternative. It's based on the deliverable. If this doesn't work, you don't owe me anything. But if it does work, this is how you're going to pay me. And it's possibly a percentage, it's equity, and so forth. So there's really 2 different plays here that I think are distinct, but yet fall in that category of value-based pricing. Would you agree?
There's a distinction that I think's getting lost here. Everything you're
Okay.
saying is right, but what I'm talking about is not deliverables based. There's a progress metric
Uh-huh.
that there's always something that a professional, someone who's good at their job, there's some needle they feel like they can move. And the client thinks that if this needle that me, the software developer, can move, like getting likes on Instagram,
Yeah.
not the button. They don't want the button. They want the likes on Instagram.
Good distinction.
And
Yes.
if I'm good at what I do and I don't let them micromanage me, this is another beauty of this is that they can't micromanage you.
Uh-huh.
You can set it up in a way where you deliver the likes. You're confident that you can deliver the likes. That's the progress metric, or that's the thing that you're on the hook for. And if it's not working, you have to keep working until they're getting the likes, not the button. The thing you're committing to is the likes.
Mhm.
You might use the button, you might use something else. It might not be a button after all. It might be something completely different. It might be emails. But if the client thinks that the likes on Instagram are going to lead to this $1 million increase in revenue, you deliver the likes. So I wouldn't really call that a deliverable. That's not the way the word deliverable is used. But the thing that you're on the hook
Yeah.
for, that you're putting yourself on the hook for, is that you're confident that you can increase the likes. And if you do that, you're done. And if it doesn't lead to the $1 million, well, that's their miscalculation, not yours. You did the piece that you committed to. You delivered the outcome that you committed to.
Yeah, you had the skill to deliver what it is they felt was needed for them to achieve the goal they
Yes.
have.
Yes.
Yeah.
That's it.
So let's transition here, and I want to ask a question about mindset then. A
Mhm.
lot of times there's a mindset shift when you're actually now basing your abilities on what it is you can impact and how you can manage that. So from an accounting perspective, I'm just kind of curious, what advice would you have for the accounting professional who's trying to do this mindset shift to actually have conversations and price their services accordingly?
Right. Uh, I mean, it's having the why conversation with new clients. You could even do it with old clients, especially ones you have a good relationship with. You could go back and ask them. This is actually something. This is an exercise you do with people sometimes when they have no clue what value they deliver. They just know what deliverables they deliver or what
Yeah.
inputs they deliver, how much time they deliver. You can go back to your clients, especially the ones that you know are really happy, have been with you for a while, and ask them for testimonials. But ask them in a particular way. And I've got a 6-question format on my website that I don't know if I could do from memory. But the first question is, basically, you just want to find out what value they've gotten out of working with you. And
Love
they
this.
might share some numbers, but you want to ask the questions in a way that they don't say like, "Oh, Pat's really sweet. She always does our stuff on time," and not that. That's just being professional. That's like hygiene. Like, she's got clean, fresh breath. That doesn't count. You want to say like, "How have I improved your business?" Those are the kinds of questions you want. How have I made it so that you could sleep better at night? Or maybe there was one particular, I don't know, some mix up. Like I had a payroll mix up one time years ago. It was a giant disaster. And, the accountant figured it out for me. And like if she had asked me for a testimonial right after that, I wouldn't been able to say like, before this, I was afraid I was going to lose $40,000 because all the overage fees and all this stuff. And then after, it was all resolved in these ways, and I ended up with a new payroll company thanks to Pat. And those sorts of stories are going to resonate with the kinds of, if these are the kind of clients you want to continue to work with, your best past clients, then those testimonials are going to resonate with new people like that. And they'll have some before and after sense to them. Like, before we worked with Pat, things were like this. After we started working with Pat, things were much better. And ideally, they're going to use some kind of numbers in there, but it could be some like subjective sense of security or decreased fear, whatever the situation is. We were afraid we are gonna, I don't know, have a huge tax bill again. I was doing my own taxes and I had this $50,000 tax bill, and then I started with Pat. She cleaned up my books and got me all set up on payroll and all this other stuff. So you can look back and sort of retroactively find out how much money you left on the table, and then use that going forward to say, okay, these are the things that the people valued. There are probably a lot of intangibles, probably a lot of things that didn't cost you that much money to actually do. And then you can emphasize that in your marketing and sales with new clients and say, like, well, if you're looking for these kinds of outcomes, you're just like our other kinds of businesses. You're whatever, you're a particular kind of farmer in Texas that has X number of, they're your ideal customer. And well, for customers like you, these are the kinds of things that we've delivered in the past. If that's what you're looking for, then I think it's probably going to be a good fit. And you can basically look back retroactively and find out what the people valued and probably how much they valued them, and that can inform fixed pricing, whether it's value or some other, for your future clients.
I love this because it's showing the application of the successes, the wins that you're having, to go back to the past clients, the current clients, and ask them not just those feel good things, as you mentioned,
Yeah.
but give practical, this is how things have changed or improved with the working relationship that we've had, and anything that can be quantified, that can show a numerical change. Things improved 10, 20%. We made this much money. The transitions we have saved us this much money. Those values are not only just them telling you what was accomplished, but it's now saying what you're good at and what you can actually help others with. So now what you did is you showed how to actually now leverage that in your marketing to repurpose it, because now it's part of your messaging as you're going out and saying, here's what you do for your clients. This is what you do that can actually be something you can experience like I did for this other person. And so all of a sudden, the potential customers, the current customers, can find new applications of what it is you already offer in their business. And so I think this is a really good explanation of not just doing the work and getting paid, but now leveraging it for future client relationships. So I really like that. That's a good application of it. So here's one of the things that I'd like to do is, I see in my experience people struggling with this transition from a mental standpoint. Do you have any thoughts or any observations you've made as you've worked with individuals who've made this transition, and any advice for how others can also do the same?
Yes. It's at the same time I could get very specific in case by case, but also very general. There's some interesting things that come up when you're switching to fixed pricing, and it kind of depends on where you're starting. But if we imagine we're starting with people who, they've maybe got a few employees that are, helping them with this. Maybe it's a small firm, they've got 4 or 5 people, and they're billing hourly almost entirely. Um, I would I would really, well, I said earlier, the principal could go off and do like an advisory type thing on the side. But the other thing that I didn't get to back then might be a good fit for that kind, for more people that are in that case, which is to start offering something on some kind of non-hourly basis.
Okay.
And just and nothing too risky, something pretty straightforward. This is not meant to like 2x your business in the first year. What it's meant to do is give you the feeling of what it's like to not be trading time for money. And this is especially good for people who are really good at what they do. So you've
Yeah.
been doing it for a long time, and you've been losing work to cheaper competitors who are new and are willing to work for pizza and pennies. So if you really know what you're doing, especially if you've got a specialty, something that you're particularly good with, like asphalt companies that are in the $1 to $10 million range revenue wise, or something. You've got something that you just know better than anybody. I would look for something you could probably something you're already selling, just buried in your timesheets, that you could break off as a freestanding thing and price that thing. Maybe it's some kind of initial book setup or diagnostic, or I don't want to use the word audit, but some sort of like deep dive into their books for some reason. Maybe one of the kids is taking over the company from the parent, and in that particular situation in an asphalt company, you've done that 10 times. You know all the crazy emotional things that might happen. You know what has you know the horror stories that have happened to past clients, and you can really speak to that thing, and you call it, like, I don't know, like asphalt revamp, business revamp, transition revamp, something, it has a name. It's a named thing, and it's $5,000 and or whatever it is. But then you deliver it. You get someone buys it, you deliver it, and you're going to feel what it's like to not be on the clock. You're going to feel what it's like to be losing money every hour you take instead of making money every hour you take. And what'll happen is a switch is going to flip in your brain, and you're going to be like, oh, I thought I was efficient before, but I wasn't efficient before. I'm doing things over and over again. I'm reinventing the wheel every time because there's no benefit to me for systematizing anything or automating anything, having boilerplate documents ready to go. None of that's using AI. None of that stuff. You're not going to think of that stuff if you're trading time for money. I don't know if we have time for a story. No, probably not. But um, I, the first time I went on a fixed price gig, I had an idea that would increase my efficiency and would deliver the thing that I was supposed to deliver in like a tenth of the time I thought it was going to take. I never would have had that thought by buying a piece of software like a plugin. I never would have thought of that if it was hourly. I wouldn't have thought of it.
Yeah. Because there would be no reason for it. In fact,
There's
actually what you would have done is cut your earnings in 10% or 190% is how I
Yeah,
should say it. Yeah.
right.
So I agree with that.
Yeah. So I would just urge someone listening, find something that you're confident that you can just 90% of the times can be slam dunk, slam dunk, slam dunk, slam dunk, and just slap a price on it that you'd be really happy for someone. You'd be happy to do it for some price. You can go pure gut instinct. Don't worry about value, but a tiny thing, 10 hours maybe. It's a short thing, 10 hours tops, and go back to your past clients. Do you know anybody like this that needs this kind of a thing? We're offering this new service,
Yeah. No,
and
I like
feel
that.
what it's like.
The thing I like about this and the simplistic way that I've actually described it is it's taking the focus off of what we do and taking a moment and considering from the client's perspective of what they get.
Hmm.
And if we can actually figure out what it is that they're perceiving and appreciating, we're trying to then price that versus the time that we're spending to do the work that we do. Because
Right.
I think we're by nature gravitating to what we're doing, which is all these tasks and all these projects. And we look at it from a time perspective rather than the client's perception of here's what I got and here's how valuable it was and here's what it did for us or would do for us. And so I think that's a good kind of recap or summary of all of this that we've discussed. So what I'm going to do, Jonathan, is I'm actually going to go ahead and kind of recap this conversation and come back to you for a closing
Sure.
thought. But
Hmm.
before I do that, I just want to point out that I've got two offers today for our listeners that I'd love for them to take advantage of. The first is what's called the Accountrepreneurs Challenge. The Accountrepreneurs Challenge is intended to actually help you over the next 90 days focus on those things that matter most within your business. This is both a personal and a professional perspective where each and every week you're given a task, something that may take as little as 5, 10, 15 minutes, or perhaps a little project that may take an hour. But the point is each and every week you're going to be working on various things to help you actually work on your business and in fact turn things around so you can build the premier accounting firm in your area. So I invite you to go to universalaccounting.com, and in the navigation you'll find free resources. Go to the free resource section and find the Accountrepreneurs Challenge and sign up for it today. It is a challenge that will actually cause you to work on the things that matter most as it relates to building the premier accounting firm in your area and getting paid what you're worth. So take advantage of this opportunity. It is free and it is for you to actually work on your business. The second thing that I'd like to do is invite you to GrowCon. GrowCon is an annual conference. It's mainly for individuals who are owners of bookkeeping, accounting, and tax businesses. As a conference, it's intended to actually have you come and hear from the experts what it is you can be doing to work on your business to help you market and sell, to acquire the clients you deserve, to offer quality accounting services and get paid what you're worth. And at the same time, from the stage, hear what those people are saying as to helping us work more efficiently and productive and improve production. So what you need to do is register now, attend GrowCon, and come and hear what it is that you need to be doing to work on your business. In addition to that, you also get to come and meet with your peers, make those connections that allow you to collaborate with your peers as to the clients that you're servicing, as well as make connections, friendships, and build those relationships that are so helpful as it relates to what it is that we do within the accounting community. So if you haven't already registered, I invite you to go to universalaccounting.com, and in the navigation, go to GrowCon for the specifics, and I look forward to seeing you there. As it relates to our conversation, Jonathan did a great job at the very beginning, kind of illustrating the challenge that he faced early in his career, realizing that the thing that was holding back the business was the hourly billing, the tracking that's going on there, the fact that they're billing their clients accordingly, and saw that there were a multitude of problems that actually existed within the business model that all stemmed from the hourly billing. And I think that's an important thing to realize, is really the ramifications of that pricing model as it affects so many other parts of the business. The second thing that I thought was helpful is we then got into this conversation of transitioning from hourly into value-based pricing and what that looks like. And I thought the conversation about what that really looks like was very important, because I believe both of us were coming at it initially from two different perspectives. And I got the definition very clear from him that this is truly stuff that you're doing that has an impact, that you're paid for before the work begins. This is stuff that you can actually price out accordingly so that you're paid in advance for the things that you're going to be working on, so that you're actually now delivering something that the business feels that they're able to benefit from, and more importantly, have them decide what the ROI is. So I think that's a very valuable consideration. The thing that I thought was also helpful in that explanation is that it's project-based, something that actually has an end date, something that we're able to see conclusion to. I think that's very important, because in accounting, we're so often dealing with recurring billings, and what we want to look at is those value-based pricing opportunities that are project-based. And I think that was a good clarification that came from the conversation. His advice at the end of finding in your business historical things that you've already done for clients in the past, that you know what the process is, something that you can now actually package and price and take to other clients and say, here's what you can do for them as well, was excellent advice to actually help us now move away from that hourly billing and go to something that you have experience in, something you've done before successfully. And you can now package it and say, not what it takes to do it and how you're going to do it, but just here's the deliverable that we have to offer as it relates to this particular service. Are you interested? It has this value or this cost, and let them decide. I think that was a great way of actually helping us go through that mindset shift of really what is it that we're doing for our clients. And then the last part was this whole idea of what it is that we can do to take feedback from our clients and see how they describe the work that they've had as we've interacted with them. See if there's anything there that we can actually identify that we could actually use as part of our marketing and packaging to actually go out and get additional clients. So wonderful takeaways from our conversation today. I think this was a valuable thing for us to discuss. So Jonathan, what else would you like to add or conclude with?
I mean, that was an amazing summary. I'm not sure how to do better than that. So I'm going to just introduce an idea to people that if you build a business, if you only charge for the stuff that you think is hard, and you think that the harder something is, the more you should charge, then the only way to grow your business is to do stuff that's really hard for you, things that are tedious, things you don't like doing. What you can do with any of these fixed price approaches, value-based or otherwise, productized services, subscriptions, fractional, whatever, you can take stuff that's very easy for you and charge just as much for it, if not more. And the thing, and there's this guilt that comes up that's like, this is so easy for me, I can't even charge them for it. I love doing this. I shouldn't charge them for it. If you let that mindset sit on you, it's going to drive you in a direction of creating a business that you don't like running, that's very hard for you and tedious. So if things feel hard and tedious, find the easy things that deliver a lot of value and set your prices based on the value of those things, or anything besides the cost to you, the time. And you'll have a much lighter feeling business that's easier to run, where you're still delivering amazing results to your clients and you're getting paid just as much money. But don't feel guilty about it. If you feel guilty about it, you're in trouble.
Well said, Jonathan. I appreciate that. Here's what I'm going to do. I'm going to wrap this up real quickly. First of all, thank you, listeners, to actually listening to this episode. I think you've gotten some great insights as it relates to business and pricing. But I'd like to actually encourage you to subscribe. If you haven't already subscribed to the podcast, definitely do so. You can go and hit subscribe, and more importantly, set reminders so that you're notified each and every week when a new episode comes out, as we have the experts come on the show to share with us various insights as to what it is we can be doing to work on our business and, in fact, have the premier accounting firm in our area. In addition to subscribing, I'd like to point out that at universalaccounting.com, there are playlists, highlights that we've actually created of past episodes. We've had more than 300 episodes now on the show, where we've actually now gone and compiled those in playlists that you can binge listen based on your current needs. If you're needing to grow your business, listening to the marketing and selling and pricing type episodes, if you're looking at trying to actually increase the services that you're offering and deliver more value, or perhaps retain your clients and get paid what you're worth, there are a variety of playlists that you can go into to meet your actual needs today. And I invite you to go hear what the experts have had to say based on the playlist that we've compiled. So go to universalaccounting.com, go in the navigation, find the podcast section with highlights, and see what playlist would actually appeal to you based on your current needs today. Also, with regards to Universal Accounting, we have a variety of curriculums and programs designed to help you offer quality accounting services with confidence. These skills are provided by Universal Accounting in the various programs and courses that we offer. Go to universalaccountingschool.com and see what courses and programs exist to actually train you, your staff, to offer bookkeeping, accounting, tax advisory, CFO and advisory services with confidence so you can get paid what you're worth. In addition to all of that, I also want to mention this. As a show, I appreciate the opportunity to actually share with you these insights. I trust that these are actually things that you're benefiting from. So when you come to GrowCon, come to me, share with me what you're appreciating, and give me some other ideas as to what it is you'd like to hear more about, so that I can actually find those experts and bring them to the show. And I look forward to doing so in the coming years. As it relates to this, obviously, I thank you for your time. I encourage you to be safe out there. If you'd like more information, definitely give us a phone call at 801-265-3777. Otherwise, be safe, and always remember, if it's about accounting, it is universal. Take care and have a great day. Jonathan, that was awesome.
You are an animal. How do you do that? You have a teleprompter thing on your screen?
I have nothing in front of me.
That is unbelievable. Wow.
Well, it's fun. I enjoy it.
Jeez.
This is
I'm
good
gonna
stuff.
I'm gonna be really embarrassed now when I try and do this promo read.
No, you're good. Well, you can have it right in front of you and read it, so you're fine.
That was unbelievable. How
But I
did
am
you
going to challenge you to remember what we discussed so you can summarize it.
Oh my God. I mean, yeah, mindset around pricing. It's all pricing it's mindset. It's all psychology. It's not numbers.
Yeah. Well, mention that, and that would be a perfect promo for us.
Cool. All right. And
when
that's
you're
in the
ready.
chat.
Uh-huh.
Hey, this is Jonathan Stark, and it was a delight to record with Roger an episode of Building the Premier Accounting Firm. We discussed the mindset around pricing, and I invite you to listen and join us.
Perfect. I appreciate that. So, Jonathan, just again, this went live, and you